Welcome to Java. Thank you kindly for joining me. It's March 18th, 2025. It is also Tuesday. I hope everybody had a wonderful evening and celebrations yesterday if you did. We've got quite a bit of things going on in the market and driving it early this morning. None other than the Fed, who is speaking and having the rate decision tomorrow, started their meetings today. We've also got some things going on in Europe that are doing major driving in our market. So let's go ahead and get started in with what is going on there. We've got a fair greed meter is in extreme fair territory still, but heading back up, gaining more retailers, jumping back into this market has risen a bit. It's at 23 right now. With this, we've got the 10-year yield is beginning to rise again, 4.318, so kind of nominal, not anything major, but as it does head up, it's going to pressure the market, as well as the relative strength of the dollar. Now, the European market, and for other reasons which I'll go over, was strengthening yesterday versus the dollar, but they're doing a bit of easing, which we'll speak about in a bit. We've got cryptocurrencies also showing a bit of pressure, losing to the dollar as it is gaining strength, with a couple of other things happening with that as well. So markets at the moment, they were up on yesterday as we kind of expected that they would. The highest probability was kind of what they would do, chop around, but they did finish a little bit stronger. Now, this is not a recovery, full recovery of the markets. We were talking about the timing yesterday for some pullbacks. Now, futures also saying that there's a little bit of weakness ahead, but we've got a lot of mixed things coming in this morning. We've got gold is about 3,000. And as I was saying before, I'm expecting a bit of a pullback to reset the $3,000 level as a new support level. Now, silver is also at a critical point. We'll see if it breaks through 34.67 right now and heading a bit higher. If it goes to that closer to the $35 mark, I expect it to be a little bit more resistance. Now we've got volatility up as well as oil. The oil going up is mostly on what is happening in the Middle East. So our daily driver this morning back over here, the daily driver is really caution. So everyone kind of doing a wait and see. We've got Trump speaking with Putin talking about peace this morning. That could be a major mover, not just for oil, but also the markets if they decide to come to some agreement, or if it's going to put in a little bit more fear if they do not. So we'll be talking about the debt break and see if their debt break has indeed been broken in Deutschland, which is Germany. They are looking at free money. I'll explain a little bit more in a moment. There was a large trade on deck was Bitcoin whale. They closed their $560 million position, which was not just that in itself, but it was also leveraged at 40 times. So that was a massive move. They did make 9.4 million in profit. However, they were also in the red for a while. So I think they kind of realized they'd taken on a bit there. And as soon as it went into profit, they closed it out, realizing that Bitcoin is not necessarily going to go as far down as the charts are looking at still, with that gap fill in the mid 70s. Could go there, but it doesn't have to. It's only probabilities. So let's go into a little bit more of what's going on with our calendar. We've got housing starts and building permits prior to the market open. And the big thing really is the Federal Reserve has started their meeting today. We're not going to hear from them, so it's not going to be a mover, but they are looking forward to the interest rate decision tomorrow, which I expect they will not do anything with the rates. They're going to stay back. They're not going to put in any shocks to the market. If they do, it will be a major mover. But really what they're looking forward to is Fed Chair Powell speaking at 2:30, looking for guidance in whatever it is that he says for the Fed moving forward. So 2:30 is really going to be the mover, unless they do take action with the interest rate, would be very unexpected. Now, Again, speaking with Trump, planning Tuesday talks with Putin. It has been confirmed they're going to have a discussion. We'll see what comes of that. I expect that as soon as they're done, the early people that know will show in the moves of the market. Now, yesterday, retail sales coming in weaker than expected. They're saying it's another bad sign for the economy. So this is also causing hesitancy, although it's not really weaker than expected. We knew it would come in weak. The consumer is facing headwinds, and we're watching a drop down in the tiers. Now, the middle class, upper class, now beginning to tighten their belt as well and spend less. So with this, I've got a couple of stock specifics, which are also a little larger tell in with the companies. Now, Alphabet is a parent company for Google, in case you don't know. They are in talks to buy cybersecurity company called Wiz for $30 billion. Now, this is showing also a shift, not just cybersecurity for Google, but also with their web services and also hiring in with the artificial intelligence. So they've got a lot of things going on positive for that company. We've also got BYD. This is a Chinese EV maker, electric vehicle. Their shares hit a record high because they revealed that they've got new charging battery system where they can charge in 5 minutes. And that has been a major roadblock to electric vehicles for some time now. So that's hitting Tesla shares. They're going a bit more negative, and BYD are, of course, having massive moves up prior to the market open. Asian shares did do well, and we're watching a massive shift from United States markets going into both European markets as well as Asian markets. So this is another marker for some of the things that we are keeping an eye on forward, as well as driving a bit of weakness here. Now, what's going on over in Europe? The German investor morale soars. Why is this? Well, German parliament voting on historic spending is supposed to say splurge, but what's going on is what they're calling Germany's debt brake that was put in by Angela Merkel. We had spoken about this yesterday. They actually had a few budget limits to where they could not overspend, but we've got now this new person that has come in, Merz. He's confident about Germany. It requires a vote, but he's got the large numbers on his side about Germany's make or break spending vote. This, in essence, gives them unlimited spending towards defense. Now, a lot of this has to do with all of the Russia, Ukraine, US saying that they're pulling out of the backing for the defense spending. So, with this, they're giving free checks out for the defense spending. And as we know from everything else we've been following, war is huge business. So it's not just Germany, but we've got Europe's defense spending spree. Uh, this is risking a debt crisis. This is a warning from a Dutch politician, but easy money, full spending, this is a different version of quantitative easing. It's going to flood their markets and cause massive inflation down the road, but none of them are looking forward to this because politically it just looks good on them for the moment, but the long term, it's going to be a lot of pain or debt crisis. If they don't tighten up, it's going to be a massive issue for them coming forward. We all know where this is going to end. So, not just in Europe, but we've also got Asian defense stocks soaring to record highs. As Europe is beginning to rearm, they've also got Taiwan in crosshairs. So we've got these wars are not going to stop despite all of these peace talks. A bit of an illusion, bit of a cover, had Israel launching more strikes in Gaza as they broke their ceasefire. So more defense, more spending, more war spending, more weaponry. Germany now, and this is no mistake, just got all of the contracts through the United States. We've been talking about this with Rheinmetall and a few other companies. They're now cornering the market on the weapons building and weaponry production. So they're shifting from vehicles to going to weapons, and they're going to be supplying more than Europe, but all of Europe's going to be pouring their money and production into Germany. So uh, in return, it's going to kind of float their market, boost their GDP because they will do the same, include all of the military spending and all of these public funds, which are taxpayer dollars, into their GDP via this weaponry spending. So this cycle of this inflation is just going to kill the middle class, whatever little bit is left of it. Now, along with this, why I'm saying this is because all of this massive printing scheme back to the central banks. And Elon Musk said he found what he's calling magic money computers, printing money out of thin air. And the short of what he found were multiple computers. There were over a dozen, I believe, that were creating payments without any accounting behind them. Some of them were in the treasury system themselves, sending payments to larger corporations, larger companies for old contracts that had either ended, timed out, but the payments were still going to the companies. And since no one had asked for the money back or looked into why they are still continuing, then the money kept flowing out of these with no accountability whatsoever, but adding to the bottom line and also adding via this mechanism through the government to the United States GDP. So, with all of this massive spending, corruption, um, misspending, if you will, it's kind of keeping these gears rolling. So, while the tightening is going to have its effects, not tightening is also going to have its effects long term. So, with this, I wish you all a wonderful green trading day where we're looking forward to Fed Day tomorrow. A lot of moves in this market. And until I see you again, my friends, stay free.